500 is teetering on the edge of a bear market. That's our top story today on the Wall Report. I'm your host, Greta Wall. The Dow is falling further in today's session after logging its worst day since June of 2020 on Wednesday. The S&P 500, though, meantime, is flat, slightly higher, while the Nasdaq has turned more positive, despite more bad retail earnings today. Kohl shares turning higher and paring earlier losses after missing fiscal Q1 profit expectations and slashing its full-year outlook. The retailer did report earnings of 11 cents per share on $3.72 billion in revenue. Now, that was shy of analyst profit expectations, but beat on revenue. Comparable sales tumbled 5.2% year over year versus analyst expectations for a 0.5% increase. Kohl's CEO blamed the profit miss on inflation. The company now expects full-year adjusted earnings between $6.45 to $6.85 per share versus the previous forecast for $7 to $7.50. Kohl's also said final and fully financed bids from potential buyers are expected in the coming weeks as it faces increased pressure from activist investors to sell. Now, Bath & Body Works shares are falling more than 8% in today's session, despite beating Q1 expectations as the company did lower its full-year guidance. The specialty retailer reporting earnings of 64 cents per share on $1.45 billion in revenue. That was better than analyst expectations on the top and bottom line. Bath & Body Works did forecast full-year earnings, though, between $3.80 and $4.15 per share versus previous guidance for between $4.30 and $4.70 per share. The company said that adjusted outlook reflects its, quote, decision to accelerate investments in information technology and its customer loyalty program, as well as projected increases in inflationary pressures. Now, Cisco shares are dropping more than 13% today after missing fiscal Q3 revenue expectations and calling for an unexpected sales decline in the current quarter. The networking company reporting adjusted earnings of 87 cents per share, which did beat expectations, but revenue of $12.84 billion missed analyst estimates. Cisco's CEO said the Ukraine war did reduce revenue in the quarter by $200 million, added $5 million to the cost of sales, and added $62 million in operating expenses. The company forecast fiscal Q4 earnings between 76 cents and 84 cents per share and said it expects revenue to fall 1% to 5.5% annually this quarter. Analysts were estimating fiscal Q4 earnings at 92 cents per share and expected annual revenue growth of 6%. Now, Under Armour shares are tumbling nearly 12% today after announcing the departure of its CEO. Patrick Frisk will step down from his executive position June 1st. Under Armour's chief operating officer will then serve as interim CEO while the company searches for a permanent replacement. Frisk took over as CEO from the founder a little over 2 years ago, and the company did not give a specific reason for his departure. Analysts, though, say it's a signal his turnaround efforts did not spark growth at the company fast enough. And Harley Davidson shares are dropping nearly 9% today after suspending production. The motorcycle maker is suspending all assembly and shipments for 2 weeks. In a press release, the company said that decision is based on information provided by a third-party supplier to Harley Davidson concerning a regulatory compliance matter relating to the supplier's component part. And oil prices have turned higher in today's session despite continued concerns over economic growth. West Texas Intermediate crude futures up about 0.25% to about $110 per barrel. Brent crude futures rising nearly 1% as well to over $110 per barrel. The energy market is concerned that high fuel prices will hurt economic growth in the U.S., but the European Union's impending ban of Russian oil imports is continuing to prop up oil prices. And U.S. gas prices hit another record high today. AAA showing the national average for a gallon of regular gas jumping more than 2 cents overnight to over $4.58. That's the 10th straight day that gas has hit a new record. Diesel prices, though, held steady at over $5.57 a gallon. Now, in the economic data of the day today, weekly jobless claims jumped to a 4-month high. The Labor Department reporting 218,000 Americans filed initial claims for unemployment benefits last week. That was up 21,000 from the previous week's revised level and sharply higher than economist expectations for 200,000. Continuing claims did fall by 2,000, though, to 1.32 million in the week ending May 7th. And manufacturing activity slowed sharply in a key region. The Philadelphia Fed's gauge of regional manufacturing plunged to 2.6 this month versus expectations for a reading of 15. That's the lowest level of activity in 2 years, but any reading above zero does still indicate expansion in the sector. The new orders index rose more than 4 points to 22.1, while the shipments index rose more than 16 points to 35.3, which is the highest since October of 2021. But the employment index tumbled 16 points to 25.5, dragging down the overall reading, and the 6-month business outlook also slumped by nearly 6 points to 2.5. Respondents to the survey also expect inflation to still be at 6.5% 12 months from now, up from their previous one-year outlook for 5% in February. And existing home sales tumbled in April to the slowest pace in nearly 2 years. The National Association of Realtors reporting existing sales dropped 2.4% last month to a seasonally adjusted annual rate of 5.61 million units. Sales were down 5.9% year over year. That's the slowest pace since June of 2020. April's existing sales do represent closed contracts that were signed in February and March when mortgage rates had just started rising. Those rates, though, have since spiked sharply, with sales expected to slow further. Buyers are also still facing a severe shortage of supply in the housing market, even as inventory rose 10.8% from March. There were just over 1 million homes for sale at the end of April, which is down more than 10% from a year ago and represents a 2.2-month supply. A healthy housing market has a 6-month supply. And that tight supply did push prices to yet another fresh record high. The median price of an existing home sold in April jumped nearly 15% year over year to $391,200. Sales were also concentrated in higher price brackets. Sales of homes priced between $100,000 and $250,000 fell 19% year over year, while sales priced between $500,000 and $750,000 rose 19%, and those priced above $1 million jumped 16%. And as mortgage rates push even higher, affordability issues are only expected to get worse. Tell me your predictions for the housing market in the comments, and I'll see you back here for the Wall Report at noon tomorrow. Give this video a like before you